Doing great. The Bears are running out of catalyst. As you know, setting up 2 weeks ago, we were looking at this window ahead of us, this window where we had a few major events. One of them geopolitical, the Iran USA conflict, which potentially seems on the verge of, well, coming to a major pause once again, we'll say. And there's a lot of optimism right now in the markets. And during this particular period, this period where we normally see seasonality wise, July be a very positive month, especially over the last 10 years, we saw that the conflict absolutely trumped the seasonalities. Then we came into the FOMC, and there were concerns that we would see something like the FOMC completely break forward guidance by going ahead and hiking. That didn't happen. And we're seeing some Fed speak come out, even though there's supposed to be no Fed guidance, that, well, they see, as they've erroneously have seen in the past few years, that inflation is going to be dropping throughout the rest of the year and into next year. And maybe or maybe not that will happen. But I think if we continue to see growth, that's likely not gonna happen. Now, of course, we could see a tremendous drop in energy prices, and that could help. And we could see things like the continuing slow movement, no movement in the housing market, and that could help alleviate shelter the component, whatever. And then we had earnings and the concern about hyperscalers and Capex spending, and about whether or not they're going to be able to see a return on their investment. That was the major window that we were coming into. Now, there's another one ahead of us. There's another one ahead of us that probably everyone is aware of, probably why retail might have made their first mistake since I can remember. You guys know that I always talk about how retail is now the smart money, and that has absolutely been the case. What we've seen happen over the past month is retail really reduce their positions, really reduce their leverage, really, which is really smart, especially coming into this window that we have, the window of seasonalities. And everyone's aware of that August and September midterm election year is very poor. And a lot of people are probably rightfully reacting to that. However, it might not be that simple. And just continuing this conversation, and we all know that we saw Capex spending increase. We saw major earning beats. We've seen earnings estimates continue to rise. This is a good reason for the bulls to be continuing here their move. We've seen a lot of leverage reset. But what we've seen happen over this past, the last week of July, was that hedge funds bought into the dip tech at a record level not seen since December 2022. You all remember December 2022 because that's when we saw, obviously, close your eyes, guys. I don't know what's happening here. Here's December, by the way, when the record buying took place by hedge funds. And then you saw the major breakout, close your eyes moment. This is when we were like, I inverted this chart. And I told you, if we break down from here, and when I inverted this chart, by the way, this was a great one because a lot of people were like, oh, that looks so bearish. I didn't show that it was the NASDAQ, and I just showed this chart like this, and I said, if this line breaks, this will water. I was deterministic. I used to always be deterministic. People don't like it. That it will drop down, waterfall down. And people looked at the chart. They very much agreed. I then let them know that was the NASDAQ inverted, and they were like, oh, because I was so bearish. Not myself. Everyone was so bearish. And then Michael Burry is like, sell. And we're like, Jim Cramer was like, no, I think price is going to melt up. And sure enough, we saw it, the melt up. Point being here was that the hedge funds, they were record buyers. They are, once again, the last week of July. We also saw the capitulation of situational awareness, which was, and in the past has seen major market bottoms happening in there. Jordan, it sounds like you're super bullish. Well, I'm not so sure that the momentum that we're seeing gaining in a potential resolution has staying power. And that's something that could definitely throw a wrench into the tires at any moment. Aside from that, yeah, the seasonalities is something that we have to fight it. But July's was off. July's was very negative, and it's not normally so. And it seems that the market is just reverting to the mean if the major catalyst, if the energy begins flowing once again through the Strait of Hormuz. That's an unknown. We don't know. Following the technicals, following the momentum, though, we see that we are about to potentially put in that follow through day. We have that breakout of the trend line over here. We're getting above the area of concern that we marked at 29,500. And we still got a little bit of work to do, but follow through day is very much here. Really, really seems to be in play. And then it's a question. Are we going to see the NASDAQ challenging its all-time highs and doing it in a window where a lot of people were not expecting it? It could happen. It's a strong move over here. What I like most here is that our positioning is absolutely beautiful. By the way, the FNGU over here on the chart is showing the entry for FNGD because we use the inverse. Now, I think I have the fix in. On the next update, we'll see. I think that's sorted now and sorted going forward. So we're gonna find that out very soon. I don't have yet over here, and that's a top priority for me, is adding in our Tesla O2, which is buy and sell side, Google and Amazon. And we're seeing here this morning, Amazon here entering the market and joining Google, which had a beautiful, beautiful. I myself missed this one. I missed this one. I was on vacation. This is a beautiful entry, and I love seeing the art in the forward test. And then Tesla obviously also here holding on to a nice short over here. And the positioning is beautiful as we continue to see, again, a lot of retail miss this move. And it might be the first time in a long side they're offsides. If you remember, retail led out of over here. Hedge funds, CTAs, they all had to play catch up. And once again, I was like, retail continues to be undefeated, the smart money. This might be their first quote unquote mistake. And I'm going to say, listen, it wasn't a mistake because it was defensive and it was smart. So, like, even though maybe it just wasn't the best timing, it was very smart. It was very smart. So that we have to, I guess, throw out there as well. Do you know what, Vakanet? I meant to touch base with you inside the Discord and ask your opinion about what you felt was happening with the current conflict with Russia and Ukrainians. And I just wanted to, if you felt like there was a turning point happening over there as well. So I'm glad you, please let me know. I'm very curious on that. So what else are we seeing over here? We have NVIDIA with an enter long pending. Now there's one other issue over here. Well, there's a couple of issues. This is what I'm doing right now. This is one. People are wondering, why did the FNG trade not trigger? Here's the entry, and what a great entry. I love it when you see that immediate reaction from our entry, like a sniper. Boom, pinpoint accuracy. I have to tell you, this one feels really good as it falls into profit right now, as coming out FANG and seeing the hyperscalers here coming out of earnings and Amazon printing new all-time highs. Bezos selling into it. Okay, dude, it's all good. And seeing Google now leading. Microsoft, bananas off its low. Looks good. So the FNGU, there was a calculation error, and TradingView simply did not send the alert to the Discord. Now, number one, obviously, on your own local machine, you want to have alerts set up. And then we have the Discord alerts and the dashboard all for confirmation. We want all those things. I have to find a workaround because there's nothing to stop this. It's not uncommon for alerts to have errors of sorts and or be missed or not go through on TradingView. So I wonder if there's a backup that we could come up with. I bet Dog Nation is going to have an idea. I wonder if maybe ultimately it needs to be set up from Python and I don't know, but that's something that needs to be sorted out and fixed. This looks like it's fixed as far as the FNG entry short showing on the dashboard, and I believe that is now sorted out. We're looking at NVIDIA here, enter long pending to be confirmed after the close today. That's the other thing that today is my top priority. I have a lot of top priorities, but this is one of them. And that is so that as soon as the confirmation, this is going to say after the close, continue to say enter long pending, that it's going to show the confirmation right away. That's my top priority for today. And I got a lot of top priorities going on. So are we going to see the similar situation where running into its end of August earnings, NVIDIA begins to rise? It looks like it. Well, we have an opportunity here as we see not only the technicals showing momentum is now breaking to the upside. We have our FNGU trade already as FANG is leading into the market. Now NVIDIA potentially, and it looks like now TQQQ is just being held back by the CTM filter. So that could be also soon pending long. We see again as the hyperscalers are leading, Google and Amazon in the market, and that Tesla weakness still being captured. Brownie Brown crafted this Nubis Group template. It's enter long pending. I haven't had the chance to review it yet, which is why it's not in our assets tickers, potential tickers. I do have to get right away Amazon, Google, and Tesla O2 onto our dashboard. They're not, so that's another high up on the list, top priority. Everything else continues to hum. Bitcoin here continues to consolidate off the lows. I thought maybe we had over here that February low. It was swept. So far, nothing more than swept. We continue to see the major wedge, and we know that Bitcoin's has breaking out of the wedge, seen every bull market run from it. And a lot of people, again, looking towards the seasonalities of the 4-year cycle, looking for that lower low to come ahead into September, into October. And the midterm elections are definitely helping that, let's say, that idea take hold for a lot of people. I'm just going to continue watching the technicals and following the momentum because I don't know what's going to happen and I don't have a crystal ball and I want to be on the right side of whatever happens. So that's what we're going to be watching right now, but we're seeing all buy side right now out of the market and buy and sell side after Bitcoin just closed that short, also out of the market. The Clarity Act and the resolution of, which seems that it could potentially be going up for a vote, probably has some type of ramification for price action coming up on Bitcoin and crypto. No way to say what's going to happen. And you have to wonder here, are we going to see risk on become a little bit more pronounced if we do see some type of, we're not negotiating, U.S. made a concession, but we're not negotiating with them. And even though the U.S. said that this was going to be resolved, it's going to be resolved, but we're not resolving it with the, I don't believe either side at any moment. Oh, boom, 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 boom. Let's go. So we have obviously universal template, Microsoft here catching a nice entry. And so one of the things that I didn't touch base yet yesterday was on our universal sendings. By the way, we have Broadcom, we have AEHR, we have Palantir blowout earnings yesterday, and Palantir now enter long pending, as well as SYM. Oh, I thought that was, well, that's gonna watch it. It might be pending. It looked like it was just pending before, but I digress. Could have been an error on my part. It's not. It's waiting for signal at this moment. And then look, this is where this is just now. This is, oh, let me continue here with the macro. The bears are running out of catalyst, and then we're going to get into some work over here. We got a lot of work to do right now. Oh man, yeah, I'm totally human on Google, and not happy about that either, by the way. But yeah. But the FNGU is obviously helping there. Let's take a look at a couple of things, and then I want to get into some work with y'all because we got a lot happening and a lot to cover. So we got the earnings, first of all, and earnings per share. And you could see that you looked at 2022. Let's find it. Bear market towards the end of the year started rising. Look at 2026, end of the year, you started seeing the earnings per share rising. And in 2027, I mean, that's something to be bullish about. However, and this is one of the things that I've seen, once you start seeing earnings falling, that's a real time to be concerned. So that's something that we really got to watch out for. You all know I've always said we have to watch out for when Capex spending begins to decline. But I don't even know going forward what that will mean. Will that be bearish or bullish? It's probably going to be bullish for the hyperscalers themselves, especially if they're able to go ahead and show that they are producing a return on their investments. But for other things like the semiconductors, for other things like especially the memory, that could be a real issue. What's interesting, though, we did see, and I hope I could find it over here, where we saw as far as the semis and I'm looking, hold on one second. I'm looking for on this last move down where we saw basically the semiconductors making up 20% of the index, now making up 16. Seems very healthy over here. What has took place? It looks like there was a lot of deleveraging that took place. And again, we're seeing the hyperscales leading. U.S. equities had a valuation reset. This is something to be concerned with, and I think a lot of people are concerned with right now as we move into the first week of August. We're into the first week of August. And from here, basically, to the midterms, the return is 0% from the beginning of August to Election Day. Now, granted, I believe that July, which is normally a very seasonality, very bullish month, was obviously negative. That might see a bit of a mean reversion, and that's why we're currently trading up right now. And if the current major situation, the Iranian closure of Hormuz, is resolved, that is something that takes away a major headwind for the market. So we're seeing all positive signs, except that the one negative, the major negative, was the situation. And if that is resolved, and again, I don't know that it will be, and neither do any of you, but if that is resolved, and I don't even know what that will actually look like, and no one does. But anyway, you guys get the point. All right. We got a little bit of work to do, a lot of work to do. So let me talk about that. This is where I left off before leaving last week. And I was in like a 72-hour session, getting a lot of stuff done. And when I haven't had the chance to get back in. So the way that I'm going to start getting back in, because I think I have the major priority that I need to work out and fix. And I had showed them earlier today to you, talked about them. The major highest priority is making sure, for example, when we see if NVIDIA is confirmed at the close today, that it's not still saying pending, that it's very clear. So that's right away what I'm going to get to work on. I know it's a job, but I have to get it done. I want to get Amazon, I want to get Google and Tesla O2 included into our dashboard because they are going to play and continue to play such an important role. And then I have to get back into this side of things, and I want to show you where we are and what we're looking at. All right. And again, I'm doing this in a way to catch up with myself. This is daily buy sides. And in the same way that we have modeled all of our, oh, by the way, let's just break in over here. The 10-year is it, what's the 10-year reacting off of? The Bank of Japan and the intervention, or the situation in Iran? I mean, let me come down to a better angle over here. And I don't have the answer to that, but it's the questions that I'm asking. And watch out for that. That would be a sign of relief for a lot of people if that were able to happen. We're still on a major breakout. We're still on a retest. And you could see that we're nothing more into some structural. Let me see how structural that is. It's pretty structural. Yeah, into a nice, that's the earliest indication over here. We're seeing obviously oil, not towards its low of since the conflict broke out, but significantly $20 off of the high of just late July. And then the dollar here has broken down outside of the horizontal after the breakout retest, never able to resume. And now we're seeing some weakening occur in the dollar. A lot of earnings to be had still this week. And let me just get this out of the way too, y'all. Gold looks like it's breaking out over here today. So just keep a watch over here. Two things. First thing, I'm just showing what a conservative breakout would be. And that's connecting the two peaks over here. And we could see obviously a ways to go into we're trading back above potentially 4,400. And then I wanted to see what a black diamond looked like, right? So I went over here and you could see that this entry was the first one. And then that one broke out. And then ultimately here, it faded and died. And then I'm just going to go ahead and redraw it from after the breakout, after the fail, like this. This is discretionary CTM style. You can see that we've had a breakout of the second attempt, double black diamond, and now it's retested in and now looking to break out over here right now. So something to keep an eye on. I don't expect gold to lead at this particular moment of cycle. I expect Bitcoin to outperform gold. That's my expectations. Obviously, counter trend to the majority of expectations out there. And if I had, or maybe we do have, no, I don't know. I was going to say if we have the gold to Bitcoin cross up here, you would see why. But that's my expectations. All right, now let's get into it. These buy side champions are what we use the universal settings on, and they could see that every instrument we're using is modeled here in CTM style. The way that we go ahead, and I'm looking for a chart to bring up. Here we go, to bring this up. And the same way that we use all of our V5. And I was looking ahead and I said, okay, we have the universal settings, and you all know how excited I am about that. But what would it look like if we also had the CTM modeled champions for them as well? And you can see the returns are gangbuster, but there is the potential here that, well, this could just be well over fit. And I know that we have the tension that, well, our, since 2023, but Jordan, it's been a bull market since 2023. Yes, it has. 2025, no. 2025 was a major consolidation year and very difficult for momentum. So, but 2023, 2024 were definitely major bull markets. I've pointed out the problem of the bear market regime, and this is something that we really need to be watching out for. You can see during a buy and hold in that period, minus 40%. Using the universal template, and take this with an asterisk, and you'll see why. Take everything here with an asterisk, you'll see why. It's all being redone. Not bad. Minus 9% instead of minus 40%. And using long only, right? Minus 5%. Not bad compared to buy and hold. So you can see the advantage of being on the right side. And the only thing, well, there's not the only thing. To see if our CTM across every single instrument we come up with is the right way to go, obviously the forward test is the greatest reveal of all times. There's other things to potentially get into and ways, and that's what I left off working on, was giving like 4 different ways to make sure, because the results continue to, in the forward test, work, but seem so abnormally outperforming anything in the markets. And I'm in the midst of doing everything possible to go ahead and making sure that what we're doing is showing the least potential for any type of overfitting. I'll leave it at that. Then we have the universal template, and the universal template is awesome because what it's doing is giving the very least likelihood of any overfitting happening, because it works on every single ticker and it has an added in regime filter. Now, this is the settings that we currently use, and there seems to be, again, this will be confirmed this week, but this is where I left off, that we do have one potential better. And one of the major differences turns out to be in 2022. And the drawdown in 2022, this is buy side only universal template, is substantial, 22%, 25% CAGR on average. Don't forget, there are less tickers here. And this is now using all of the tickers that we have over here. And it stands to reason that the CAGR will end up being higher. But you can see that CAGR over here actually rises. And you could see the outperformance even in the most recent years. And then you could see the major difference in 2022. So it stands to reason that this is an upgrade that only makes complete sense. And I needed before, like, I couldn't be leaving and saying, oh, by the way, I needed to be able to explain it to you, work it out with you. But it seems that this is something that is going to be implemented, the upgrade to what are better universal settings, because we want the best, right? And we always talk about we want what we believe to be the best, and if any point in time we're able to roll out something better, that's what we want, okay? Next, in the process is also looking at the potential of 2-hour buy side only. You could see that. No, I have the small upgrade on Zero Hedge myself, so that I don't have any ads, because a lot of those ads are just inappropriate, and it's worth it to me not to have that. So that's the only benefit. For me, it's a major benefit, and that's why I do it. So again, same potential issue here. Is this something that potentially is overfoot? Going forward on a regular cadence, we're just going to be tracking the forward test. There is more opportunity for slippage on the lower time frame because there's many more trades compared to the higher time frame. The higher time frame, the daily time frame on our stocks is just like has been a sweet spot. Nevertheless, it's something that we want to know. Look at the number of trades. 1,600 trades compared to I thought it was going to show me the number of trades, but it's massively more. All right. So something that I'm watching. Now, 2022 sell side. At the same time, well, let's find out what potentially the best sell side is for all of those, that same sector watch that we looked at, the names that we want to be highly focused in onto. Look at 2022 on the sell side, and you can see, wow, even in a major bull market, sell side performing pretty okay. So the logical conclusion is then, well, what happens when you combine the long side and sell side? Don't forget, these are CTM modeled styles. So, the forward test matters here. And you could see that, okay, this is really the dream where we want to be. But I feel personally what I want to add to my long side of the universal settings, is the sell side, which I know is CTM modeled, with the buy side, which is universal settings, least potential for any type of fitting. And you can see over here in the lighter color, adding in the sell side. See, this is not right. Why do I say this is not right? This needs to be fixed, okay? And this will be, because this shouldn't be showing 22%. This should be showing right over there 2%. The 22% is with our current, so we're not seeing the difference here. So this is just where I left off. But so obviously that's significantly higher. And if this one's off, then all of these on the gray are showing what it looks like with our current, okay? But it then changes now to the difference here of the better universal settings, the best universal settings with the sell side. And that's where I want to be. I think that, because you never know. Obviously, you all see the incredible uncertainty in the markets, and they're for good reason. And a lot of people think that we're in a bubble, and we're probably in a bubble. The question is, at what stage of the bubble are we? And there's ramifications for being too early. Dr. Michael Burry, 2023, March, sell. Wow, you did really off sides here for a few years. We saw our indexes put up back to back 20% plus years. This year, already tracking also for another 20% year. That's like the 96 to 2000 bubble area. We could be in a bubble, and eventually, and I've always said it, I get worried about, the future. Eventually it could end badly, but when it does, I want to make sure CTM is in a position, even if you're buy side only, to protect yourself, and if you're buy and sell side, to be able to really, really continue put yourself further ahead. That's what we're looking at. So there was one other thing, and I'm just going to find it just to point it out to you. Right here. This is the Bailey side, and it says same bar fix. Anyway, I'm just showing you what I'm working on. Not ready to say, okay, here's exactly the data. We're data-driven people. Here's the data. Now you know exactly how you want to execute off of. This is where we're leading up to, and this is why I have a ton of work to do and continue at it. All right. Hope that makes a lot of good sense and really helps people understand where we're going. Now, some people might say, well, George, I want to exit off of the buy and sell CTM styled off of the sectors. Okay, you could do that. You're going to have the ability to have full access to all the CTM templates, no doubt. Me personally, I feel that, this is, in one of my accounts, the exact way that I am going to go about it. Universal template buy side, CTM modeled on the sell side. And then maybe, though, in another template, in another account, I do our core CTMs, and they continue to forward test great. Maybe ultimately I do also, and I'm not starting that way, the buy and sell side, because that right there is the dream. All right, y'all. On the way out, if you had a chance, go ahead and hit that like, and we continue to see here. You can see the semis now breaking out, joining. You're seeing memory, which has been lagging after the euphoric blow off, now also maybe coming to a point where it's getting ready to join in the breakout over here. And it looks like that, I mean, NASDAQ up 3%. It looks like the volume today is going to eclipse yesterday's, and that will be the follow through day. You can see that we also have our conservative breakout. And by the way, here you go, just so you can see it. Obviously, that was what a black diamond looked like over there. CTM all day long. CTM strong. All right, y'all. I'm highly motivated, and I got a lot to do, as I explained to you. And that's why we check in, and that's why we've been working. All right, all. Execute. NVIDIA here, getting ready to for pending long to be confirmed today. Entries tomorrow morning. We have obviously a few different potential entries setting up on the universal settings. And we're managing our open FNGU, Amazon. Some people have the open Google and Tesla. Have a beautiful day, everyone. Grateful for each and every one of you. God bless you.